don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabelle, and Melissa.
Hey guys, welcome to the Real Estate Jam podcast. I'm JD, and with me, as always, my co-host
Melissa. Happy to be here.
Melissa's happy to be here. Hey, we have a pretty exciting show to bring you guys today. There was a little bit of a scheduling conflict that we navigated like true professionals, and so we're really happy to present to you guys Lisa Hylton. She's the founder and CEO of LisaHylton.com. It's a real estate investment company that provides opportunities for entrepreneurs and business owners to invest in tax-efficient real estate investments. Lisa's also the host of the Level Up REI podcast, which airs every Tuesday and the first Thursday of each month. And she has conversations with passive investors. Lisa Hylton is a CPA with approximately 10 years of audit experience, PwC, and 4.5 years as controller on a private equity real estate funds at Los Angeles investment firm Ares Management. Her current mission is to provide podcast episodes and investment opportunities for entrepreneurs and business owners to level up their business and real estate investing to build long-term wealth and financial freedom. And I'll just say, Lisa, thank you so much for being here. Your bio, it kind of hits on so many different things that you're doing and so much value that you can bring to our audience and to me and Melissa. We're super excited to be able to chat with you today.
Yeah, I'm super happy to be here. Thanks for having me.
So let me just ask you one question, then I'll let JD talk. On the CPA side, we hear that a lot. We, just at a meetup the other night, does anybody have a CPA that understands investments and how we do it? And so are you a CPA that you focus just on people who are investors and real estate professionals, or do you do the whole gambit of people?
That is a really good question. So I am an inactive CPA in the state of California. And I focus on the investment side. I do not do taxes or my business isn't really focused on doing taxes or accounting work. Okay. But I do take the knowledge that I've gained from my years of experience as a CPA to help me in terms of understanding when I need to talk to a CPA that's, deep on real estate. So I do have relationships with a lot of real estate CPAs.
Very good.
So I think that's what I heard was that you get to do all of the fun stuff of being a CPA and none of the bad stuff like crunching the numbers.
That's a good way to put it. Yes. Yeah, totally.
Well, Lisa, do you mind introducing yourself to our audience and letting them know kind of what you're about and where you're from and how you got here, and hopefully we can provide them with some value.
Yeah, totally. So to add a little bit more color to my bio, I am originally from the Cayman Islands, and I've been in the United States now a little over 10 years. I live in Los Angeles, so sunny California. And during that time, I've spent 10 years, as I said, as you mentioned in my bio, 10 years in public accounting, which started in the Cayman Islands, 4 years in Cayman, 4 years in Boston, and 2 years in Los Angeles. Before going to work as a controller on private equity real estate funds here in the Los Angeles area. So I grew up around real estate. My father was a contractor. He built 14 apartment units when I was a child. And sometime in my middle school age period, he was diagnosed with a brain tumor and passed away when I was about a sophomore, junior in college. Because he made those investments, that enabled my family to continue to go on. I am the eldest of three that my parents had together, and they also had two other children before they met each other. So by making those investments, they were able to continue to send us to school long after they were unable to work. So definitely I have been a product of real estate investing. I have seen it firsthand, but my parents were really big on me going to college and going to school, and not necessarily on real estate investing. So I did buy my first property when I was in Cayman shortly after college, so in my early 20s. And I bought it because I loved it. And everyone was like, yeah, you need to buy real estate. You need to buy real estate. Right? So you buy it because you love it. How many people have loved buying, like seeing a property and they buy it because they love it? And then you try to rent it out and then it doesn't cash flow. So that was my story. It broke even the first year and lost money. So I was floating that property for a total of 6 years. During that time, I was an in-country landlord. So I lived in Cayman for the first year that it broke even. And then for the next 4 years, I was out of state living in Boston. And then the following year, I was living in LA. I got an email when I was living out here for over $1,000 AC breaking down. And I said, okay, I'm done. This has got to go. So I called up the same real estate agent who had helped me to buy the place to help me to sell the place. And she did. And I got out and I was like, you know what? No more real estate. And I say the universe has a sense of humor, because a year later, I ended up taking the job working for the investment manager. And I said, oh my goodness, there are people like really making money and also losing money investing in real estate. But like, you just need to know what you're doing. And so, yeah, that's how my journey began.
Well, that's amazing. And I think we've all been there. Me and Melissa definitely had properties that didn't even come close to cash flowing or breaking even. So I think we always say that you're going to pay for your education one way or another. And it looks like in that instance, you're paying for it the hard way. But you didn't drown. You didn't go bankrupt from that one property, and it gave you a lot of experience, which indirectly, I'm sure, played a part in your decision to move into real estate after that. So I'm wondering,
definitely,
what made you decide to jump back into it, and what did your real estate experience look like when you decided to come back into the world?
Yeah, totally. So once I started working at the investment manager, there was a girl who was working there before that I knew. And she said to me, she left a month after I started. And she said to me, Lisa, it'll take you 6 months to figure out what you're doing, and then another 6 months to determine whether you like it or not. And she was right. In that second 6 months, I realized, okay, I can do this work, but I don't see myself here forever. So I'm going to need to build the next chapter. So I used that 6-figure salary to help me to build a runway, even though I had no idea what kind of business I was going to leave for. I just knew that I wasn't going to stay there forever. So I just started saving. So that looked like, obviously 401ks, because that's what I knew at that very point in time. Looking at where I lived, choosing to live in more economical places in Los Angeles, which is possible. If you want to live like in a $3,000 apartment compared to a $1,900 a month apartment, big difference in terms of cash that you can save. And, managing my budget, like I cut out all travel. I was big on traveling to all the different places, and I cut out all of that. And I discovered Bigger Pockets, started listening to a lot of those podcasts, reading a lot of books. At first, I wanted to buy a duplex here in LA. But the duplexes cost $1.something million. And then after you buy them, you need like money to fix them up. And I was like, okay, this is obviously not going to work. So then my next step was turnkeys. So I went looking for turnkey properties, Alabama, Detroit. And then I couldn't pull the trigger because of my early experience with that property that I bought in Cayman. I was very gun shy about whether the numbers were really authentically true. So for a while I was looking at turnkeys, but just couldn't pull the trigger. And then eventually I discovered syndication, not because I was looking for it. I was at this personal development program and I met a lady who, at the time was a real estate investor, but I had no idea. 6 months after meeting her, and she and I were in the same group together, some of the other participants asked us to exchange business cards. And I saw that on her business card, she was a real estate investor. And I said, oh my goodness, I'd love to talk to you to learn more, like what about what you do. And it took me about 2 months later to call her after I found her card in my bag. After I was cleaning out my handbag, I saw her card and I was like, oh my goodness, I haven't called her. So I called her, and that's how I got introduced to real estate syndications. And funny story is, about a year or so before I met her, I was out to lunch with some of my colleagues and the auditors. And I said, I would love to invest in self-storage. Has anyone invested in like self-storage facilities? And people looked at me like I had multiple heads. And I said, okay, I guess that's not possible. And then I later found out that it is possible. So yeah, it's been a game changer for sure.
Yeah, absolutely. So are you running syndications? Are you a general partner, or what is your role in these syndications?
Yeah, great question. So I have leveraged my experience. And for anyone listening today, the gift I want to give to you is the following. Start where you are and use what you have. I am an accountant, and I've taken care of funds for my entire career, 14 and a half years. I was either auditing them or doing the accounting for them. And I said, you know what? I want to be a fund manager. I create funds that invest in real estate, and I partner with experienced operators around the country, but primarily in the Southeast, that are buying 100+ multifamily apartments, primarily Class B, because that's the asset class I like to play with. I have personally invested in C, B, B+, and A-. So I know with different operators, and I've experienced all of them, and my preference is B. So that's what I do. I created my first fund in 2019, raised $500,000 to invest in a 250 unit apartment complex in the Atlanta area. So it was 2 apartments. One was 100 and the other one was 150. It's like, as I said, I started with what I had, and like I could have said, okay, I'm going to try and be an operator or whatever, but I have 14 and a half years of experience as an accountant taking care of funds. I'm going to use what I have. So yeah.
Why B versus A?
Yeah, great question. So I prefer B because for me, A's generally come with a little bit less risk, give or take. But I prefer recession-resistant asset classes. And for me, multifamily B class specifically, I have found to be the most recession resistant. In the last current recession, people before COVID, C was very popular, but through COVID, C has experienced a lot of pain, as many of those people have been unable to pay rent. And so people still invest in C. They find other ways to do it. So like, for instance, they will do like Section 8. They'll buy an apartment that has a lot of Section 8 people. So they know that they're going to guarantee at least a large portion of their rent. But for me, like I prefer the B class over A. Brand new development, I see them, they're beautiful, but it's not necessarily where I like to play the most.
And does the return that you're getting from those asset classes play into your decision on why you choose B over A, or is it?
Yes, somewhat as well. I also try to look for properties where there's a healthy balance between cash flow and appreciation. That said, as an investor myself, I recognize that it's good to have exposure in different asset classes. So when I invest, like I personally I've invested in A-. And, I've also invested in B and C because for me, it's like you're at different places and you want to diversify your pot of investing and your portfolio. So, yeah.
Yeah, I definitely think that that's important. It limits your risk, and it also gives you the experience to make those kind of decisions in the future. Now and you wouldn't know you'd never invested in A. Why you're looking at A's and instead of B's and that kind of stuff.
Lisa, does the B attract you maybe a little more because maybe there's some add value there versus an A for appreciation?
Yeah. That's also a good point as well. B do have the value add aspect, which I do like. However, I prefer to stay away from the full gut jobs unless the operator has extensive experience doing that kind of work. But personally, I guess it's my conservative nature being an accountant and also working with a lot of accountants who are primarily the people who are interested in investing. So, yeah.
Awesome.
Can we talk about maybe a little bit about what your criteria is and how you came up with that and how you're deciding, okay, this is something I want to invest in. This is one a project I don't want to invest in, or I don't want to take my fund to.
Yeah. So for me, it's a variety of different things. The first thing is the operator. That's the first thing in the equation. And for me, I think that is like the foundation that people should really get comfortable with. So one, I want to understand their track record in terms of what kind of projects they've done in the past. Number two, I want to understand how they communicate. Are they on a quarterly basis providing P&L as well as rent roll? Myself and the investors that I work with are generally sophisticated and accredited investors, so they understand how to read P&L. They do this for a living, so for them, like it's something that they want to see and be able to look at and understand for themselves. Secondly, when I'm working with a new team, I will research them. So I Google online to learn as much as I can about them, listen to their podcast interviews that they've done, listen to the blogs that they've written. If they've done videos, listen to them on videos. I try to get as much content as possible to get an idea of what kind of person they are outside of just themselves. And I'll listen, of course, to their webinars that they present regarding the deal, how they answer questions, to understand, hey, like, do I feel like I have a sense of, what these people are all about? And then lastly, I will, talk to other investors. And for me, having a podcast myself, getting on other people's podcasts, getting out there, building relationships. This is something that this is the value that I bring to my investors, is that many of them, I know what it's like to work these jobs. Yes, you're getting 6 figures, but you're working till midnight and you're also working on the weekends. So you don't have time to, you're burning the candle on both ends. Plus, you might have a family and you have children and you want to spend time with them. So yeah, that's where people like myself come in, who are building these relationships with lots of investors and with lots of operators to be able to say, hey, you know what, I've met people and this person has invested with them. What was their experience? And getting that second and third referral, to further understand what that person's experience has been. So yeah.
I think it's really important to highlight a piece of that for our listeners, is that your social media presence, what you put out into the world, other people are looking at. So whether that's a bad reflection of you or a good reflection of you, people are going to be seeing that, looking at that. The people that we choose to work with, we always research them the same way. And I'm sure people are researching you that way too.
Yeah.
So I just think 100%. It's super important that you be intentional with the content and information that you're putting out there, because everybody's going to see it and it can help or hurt you.
Yeah. So in addition to that, in terms of some of my criteria is, so once I get comfortable with the operator, then we're good on the operator side. Then the second part is the deal. So as I said before, I prefer multifamily Class B assets. And then I like to see that they are in growth markets. So markets that are showing population growth, that are showing job growth, and are landlord friendly. So you can, I will Google the city online, Google Atlanta population, and you can see what the trajectory is for that city over the past 10 years. I'll go on to city data and I can put in the zip code for where that particular apartment's located. And I can check out things like what is the average income in that particular area. For instance, I don't like investing in areas that are less than 50K. 50K is the average income in the United States by and large. If you're investing in an area less than that, you now have problems collecting rent. And people are working hard to make their money. Like, they don't want to be in a situation where they're investing in a place where it's really difficult to collect rent because that affects your returns. Crime rates, also housing prices, looking at those kinds of things as well.
Yeah, that's really good. And obviously every area is going to be different, and your return on each deal is going to be different. All of your stuff is accredited investors that you're working with. Do you guys ever do any syndications with non-accredited investors?
Yeah, I do. I have done syndications with non-accredited. The one that was in 2019 was a 506B offering. So it was only for people that I had previous relationships with.
Right. And as far as previous relationship, what does that mean?
Yeah, great question. So typically, say for instance, I meet someone today, I usually do a 30-day cool off period. So I meet them, have conversation. I understand what their goals are, what they're trying to achieve. And then, I'll add them to my list in terms of like getting newsletters, because I have a podcast. So I'll share, newsletters, blogs and whatever, but I'm not sharing any investments. So after 30 days, during that time, I might have a follow-up call in terms of due diligence, if they have any questions for me, questions about deals, etc. But then after the 30-day period, by and large, is when I will say, okay, hey, just want to share if I have an investment opportunity, that's when I would share an investment opportunity. But that's the approach I take. Once again, probably a little bit more conservative than other people out there. But I'm trying to stay out of jail, so right. I'm good.
Away from the big fines. So when you go to pitch these deals and you're raising the money, can you talk about what that actually looks like? It's pretty intimidating for some people in our audience, especially, and it was for me and for Melissa too, I'm sure. When you first start going out and trying to raise money, what does that look like?
Yeah, great question. So when you first start, it's hard. Like there's nothing to it. It's going to be challenging unless you're in a circle of people who are wealthy, but that's not true because people see you a particular way. And they have to overcome seeing you in that way. They've only seen you ever as an accountant, or they've only seen you ever as a wholesaler. So now you are a syndicator. It's like, what? I don't understand how that works. So you have to build a platform. One of the greatest books out there is called The Best Ever Apartment Syndication Book by Joe Fairless. He breaks it down perfectly in that book in terms of how to build the thought leadership platform in order to attract, nurture, and then get to a place where you can then connect and have people then invest with you. It's not overnight. It does take time and intentionality. So it's definitely a process. But I guess nuts and bolts in terms of things that people can do. Like one, I think, if you decide that you want to syndicate, so you're an operator or you're not an operator, you want to play as an asset manager, or maybe you want to be in investor relations, whatever role you're going to play, all of them need to bring some money to the deal. So what you probably need to start doing if you are in the beginning stages of your journey is to start thinking about, hey, having conversations with people around you. So to say, hey, like I'm interested in investing in real estate And, is that something that you're interested in doing? And, starting those conversations so people start to begin to know that this is something that you're interested in, and they start to think of you that way. And then from there, start getting clear about what your unique ability is. Like maybe you have experience fixing and flipping. So maybe you have that experience could translate into asset managing, and that kind of stuff. Like, sort of taking a look at what you bring to the table and how you could add value to the team, because syndication is a team sport. So how could you add value to the team? And then getting clear and good at the way at which you can add value, and then looking to partner with other people, collaborate and work with other people, knowing that, there are very few people out there who are able to do the whole entire process themselves. And even them have to hire people. They must be hiring underwriters, they're hiring asset managers. So until you get to the place where you can hire, then you collaborate and you partner. And that comes from you getting clear about what you're good at and what you're willing to keep doing for 5, 6, 7, 8, 9, 10 years. And then coming with that skill set and then partnering with other people. So yeah.
That's really good info.
Yeah, it is.
Mm-hmm. And some people, Lisa, like to be in the partnerships. They don't want to do it. Even if they could do it, they don't want to do it. They like that ability to bounce off each other and venture into new projects and stuff. That's exciting to them.
100%. Exactly. I think it's better working with a team, like as opposed to being by yourself. Yeah. So yeah, I have tons of people around me. Thank God.
Right.
So yeah.
It's way better, I think, to share your successes with people who understand the struggle. And it's also better to get advice in your struggles from people who have been there before and that have a vested interest in your success. And having good partnerships and good people around you really make the difference. I think a lot of that kind of stuff.
Yeah, very important.
I was just going to say thank you so much for sharing. That was just wonderful.
Really amazing. We appreciate you taking time to share that information with us. I'm wondering if we have a few minutes left, if you could share with people how they can get in contact with you, if they have more interest in syndications or raising money or lending money or any of that kind of stuff. Can you tell us where our listeners could come and find out more about you?
Yes. One-stop shop place. So lisahylton.com. And that's Hylton, like the Hylton Hotel. Only thing with a Y. And I have a free ebook. It's called A Beginner's Guide to Real Estate Syndications. So same thing, lisahylton.com/ebook. So really simple.
Awesome. That's amazing. Again, we apologize for the scheduling conflict, but we're so glad that you were able to fit us into your busy day. Thank you so much.
Thank you, Lisa.
Thank you for having me. Appreciate it so much.
Bye.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.